Hey everybody, this is Abby Finance here. We're on a mission to educate our listeners about money. Please subscribe if you like what you hear, and leave a like or a comment if you want to learn more. Today we're going to take a look at Victoria's Secret, and we're going to try to understand why they have fallen out of favor with the stock market recently. So Victoria's Secret actually trades under the stock ticker LB, and the company that holds Victoria's Secret is L Brands Inc. So over the past year, they've declined by about 42.6%, so they've nearly halved their value over the past year. They were up near $85, almost $90 per share just earlier this year. And over the past 5 years, they're only up about 28%, and it looks like they actually went public here in 2012. But just as recently as 2005, they were up over $92 per share, and right now they're only $47 per share. So to me, this looks like a great buying opportunity here. Victoria's Secret stuff appears to be on sale. And as we scroll down further here and we read about the company a little bit, we actually are able to see that L Brands Inc. actually owns not just Victoria's Secret, but also Bath and Body Works. So yeah, as you guys know, like Victoria's Secret is one of the more famous like women's underwear brands, and they actually used to have like swimsuits and stuff, but since they just recently sold swimsuits off, there's been some bad news around the company. And just in general, retail companies and clothing companies have been out of favor in the stock market recently. So L Brands has taken a significant decline in their value recently, and we're looking at this decline in price as, a great opportunity to maybe pick up some shares. So just doing a quick scan of the stats here, there's a couple things that really jump out at me that are pretty good about L Brands Inc. Their market cap is about $13 billion, so that's a comfortable valuation. It doesn't seem way too expensive to me. It's comparable to Under Armour, which is another company that I own. And also their price to earnings ratio of about 12 is really great, meaning that they have a lot of actual earning power backing up their price. And their dividend yield is quite great. So over 4% dividend yield. I think they're actually paying out about 60 cents per share. So it's well over 4%. Robinhood's dividend yield stat is quite commonly incorrect. So I'd recommend, if you guys are really paying attention to dividend yield in Robinhood, you should probably go out and check it against Google Finance or Morningstar. So speaking of Morningstar, we're actually going to jump into their website really quick and just do a quick overview of their general financials. And we're going to talk a little bit more about why we think L Brands is a good buy right now. So jump into the internet. We're going to go to LB Morningstar. Yep, right there. And we're actually going to pull up the second result. This is something that we quite commonly look at. We're going to rotate the video here. Hope you guys don't mind. Alright, so now this shows financial data all the way back to 2008. I hope you guys can see this well on your screens. Try to zoom in a little bit. Here we go. So their revenue has increased from about $10 billion in 2008 only up to about $12 billion in 2017. So while their revenue has not been increasing very much, it has been incredibly consistent over the past 9 to 10 years. And also their margins have been improving over this time period. And as a result, their net income has been increasing as well. So their earnings per share has been going up significantly. It started around $1.89 and now it's up near $4. So their earnings per share has about doubled over the past 10 years, which is really phenomenal. Their dividend growth has been great. They originally were paying out 60 cents in 2008. Now they're paying $2.40 or 60 cents every 3 months. So, they've had some really great earnings growth, dividend growth, and they've been buying back shares, which is a great way to increase shareholder value. Now, here it is. Here's a really big red flag, and this is something I hadn't actually noticed in my analysis yet. And their book value per share was positive $6 in 2008, and now looking at it in 2013, it actually goes negative for the first time, and it continues negative into 14, 15, 16, and 17, it's already become even more negative in the beginning part of 2017. So this is quite interesting here. While their cash flows have been increasing, it looks like their capital spending has also been increasing. So yeah, I don't know. This is a little bit of curveball here. Wasn't exactly expecting that. You know, it's really bad to see the book value per share be negative. That essentially means that the company is holding more liabilities than assets. So if I were to jump into the balance sheet really quick, sorry guys, I didn't really plan on looking at this stuff. I wasn't expecting to see that type of result. So this is going to be a bit longer of a video than I was expecting. Here we go. So yeah, I mean, if I were to try to highlight two numbers that I'm looking at here, I can't really. Yeah, so it's that column right there, 8,170 total assets in the year 2017. So that's about 8 billion in assets. And then this number down here, 8,899,000,000. So yeah, I mean that's about 9 billion in liabilities. So that's where you're getting your negative book value per share from. So now I'm just trying to explain that, like, where did this all come from? Why did all of a sudden their assets get overtaken by their liabilities? Is there any number that really jumps out to me as unusual or significantly higher than the year before? I'm just scanning here quickly, and you know, I'm not really seeing anything too noticeable. And honestly, guys, if you catch something in these financials here that I didn't notice, please feel free to leave it in the comments. Yeah, I mean, they've been increasing their long-term debt, which isn't a great thing to do. But it hasn't been by a significant amount. So yeah, I'm really at a loss here, guys. I'm not really exactly sure what Victoria's Secret and L Brands Inc. has been doing here, other than really purchasing back a lot of their own shares. Yeah, I mean, it looks here like treasury stock has gone up significantly by 1.7 billion. So what I'm guessing there is that they've actually just repurchased a ton of their shares, and they may have actually even issued a little bit of debt to do so because their company has gotten so cheap in the stock market. So I guess while it did initially look like a red flag there that the book value per share was going down, pretty confident that it can recover and that L Brands can actually begin to increase in value again over time. So pulling the stock back up here, I think that, you know, about 40, 47, 48 would probably be a good buying price for L Brands. If you see it go above 50, it's probably not going to come back down below that. And if it breaks below 45, you know, there's no knowing how low it could go. But I wouldn't really say that that might happen unless the overall stock market tends to decline, which probably won't happen. So thanks for checking this video out. This is Abby Finance. Have a good one.